Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. The Federal Reserve Bank just lowered rates for the third time in as many months. Investors fear this means that U.S. economic growth is in danger and that the Fed chose to artificially prop up the nation's banks suffering from high-risk lending schemes during the real estate boom. U.S. banks by now have acknowledged quarterly losses of billions of dollars, and their shares have lost over $120 billion in collective market capitalization. As a result, the U.S. dollar has dropped to record lows in world currency markets. High-risk lending practices have caused disruptions in countries with exposure to U.S. mortgage debt, and those whose own recent real estate booms have created similar environments. But the Bank of England has reacted in the exact opposite fashion. As U.S. borrowing costs dropped to 4.5%, the BOE has held steady at 5.75%. Inflation has dropped, and the British pound sterling has hit a fresh high above $2.10. I've invited wave strength analyst Adam Last to explain how this discrepancy has created opportunity for smart traders. Welcome, Adam.
Always good to be here.
So tell me, why these different approaches to solve the same problem?
Well, it may be a simple issue of timing. At a critical moment in the life of the American market, we had a new Fed chairman stepping in who followed the previous chairman's program for a very short while, 2 quick increases, and then just did nothing for a year. Now, at the same time, the British central bank kept raising rates. They saw the markets coming up, they saw the real estate market coming up, and they did the smart thing. They jacked their rates up and up and up to cope with their rising inflation. Now, they've got inflation under control, and that gives them a lot more tools in their arrows in their quiver, well, tools in their toolbox, ways to cope with the situation. Now they can afford to stand pat, knowing that they can do anything that they really need to do in this situation. It's all a question of approach. They did what they needed to do. That leaves them sitting pretty now. The Fed didn't do what it needed to do, and it's coming up short.
Well, how does the European Central Bank fit into this picture?
Well, now we're looking at more of a committee situation. They're pretty much splitting the difference between the American and European approach. They're a hair more conservative than the Americans. Their rates are a bit higher, and they're certainly not cutting in the same way we are. But they're faced with this broad issue, just a broad range of economic situations. England is a central economy. It's one economy and one bank to deal with it. The European Central Bank has to deal with a wide myriad range of economic troubles, some of which are a little dotty. I mean, many of these countries that are in the EU right now on forgiveness, having clearly broken the rules. So the EU can't act with the same definition that the English bank has managed to act.
When we look at these rate differentials, the carry trade must be booming right now. Do you see that?
Well, I mean, if you're a multimillionaire, then the best way in the world to make money is just to pack a suitcase full of dollars and head for England. But I mean, we're looking at what the American rate is now, bank to bank is 4.5, rather the British rate is 4.5, the American rate is 5. No, I'm sorry, I have that backward. The American rate is 4.5
and the British
rate is 5.75. That gives you a point and a quarter. You can make a lot of money, right? But it takes an enormous amount of money to do it. There are actually some more interesting ways to do it without getting on an airplane and managing to leverage things up a minute so it doesn't take quite so much money to play.
Well, how far do you project the dollar will fall against the euro and the pound?
We've seen a 7% fall since May of this year alone. Now the Fed is claiming that they're going to back off the rate cuts, that they've done everything they can do. And in fact, we've kind of been warned by Mr. Bernanke that he sees a slowing economy coming. The question is, now that he's broken the seal on the genie's bottle, is he going to be able to keep that genie under control? The pressure on him to continue cutting is huge. Every time we see a stock market drop now, the phone's going to be ringing on C Street. And can he resist this immense amount of pressure? We don't know. This has been an odd duck to calculate. Any further rate drops, and we know that this will cause the dollar to continue to fall, if not already seeing it fall. I would have to say that a fair bet would be a minimum of another 4 to 5% drop over 12 months. That's at minimum, barring any changes. I mean, a disastrous change could make it drop faster than that.
And how do you recommend that investors take advantage of this situation?
Well, again, you could pack a suitcase full of dollars and head for Britain, but that's unfeasible in most circumstances. An interesting way to play, Ryder maintains something called currency shares. This is an ETF where they did you the favor of going and buying up British pounds. They're storing them at JP Morgan in London, right? And then they divvy it up and sell shares here on the US market. Again, maybe you could hope to pick 5 to 6% up over the course of a year, barring disaster. But options are available against that in the US, in the Chicago exchanges. And there you can really start to leverage things up a bit to maybe 30, 40, 50, 60% in the short term and 100% in the long term. It's much simpler, and again, it's tradable entirely here in the United States.
Very interesting. So I can get you to write that up so I can post it on the website for the viewers?
Absolutely, absolutely.
Great, thank you so very much.
Always my pleasure.
To read Adam's report outlining his recommendation, go to the homepage of taipanfinancialnews.com and look under the Investment Strategies section for this and other valuable investment and trading information. To learn more about Wavestrength Options Weekly, please go to www.wavestrength.com. Join us next week for another opportunity for profits on TFN's Smart Trading Action Alert. For Adam Lass and Taipan Financial News, I'm Laura Cadden.